Hey guys, today we're going to talk a little bit about candlesticks. Candlesticks is probably one of the most important tools that you need to know as part of your technical analysis. So, in this chart, as you can see, we have plotted Bitcoin to Japanese yen on a scale of 1 minute using data feed coming in from the exchange called Bitflyer. Now, the genesis of a candlestick, goes back to a Japanese method of trading called the candlestick method. Apparently, Bitflyer is also a Japanese exchange. So let's deep dive and get to the basics. So, the start of the process, whenever an investor is trying to place an order, that process is called order placement. Okay. There can be two possible types of orders, a buy order or a sell order. Every time there is an order placed, it gets appended to a kind of a book we call as the order book. So the order book will have buy orders and sell orders. And every time there's a match between the buy and a sell order, a trade is getting registered. A trade is basically a contract between the buyer and the seller, where the seller is obligated to sell certain number of shares of a given asset class at a given price to the buyer. And the buyer is also obligated to buy the same number of shares of the same asset class at a given at the same price. So that's what a trade is. And a trade could be registered in the exchange every second, every millisecond, who knows? Depends on the volume. So every time there is a trade being registered in Bitflyer, right, on the asset class, which is Bitcoin to Japanese yen, that information flows directly to the app. Now, what the app does is it aggregates these trades over a period of time, and this time is 1 minute in this case, to form what we call as the candles. So this is a perfect example probably of a classic candle. A candle really has two parts to it. It has a solid body and it has these threads coming out of it we call as the wicks. Now let's try and understand what data do you need to form this candle. There are four major data points that you need to know, right? So over a period in time, which depending on the scale, which is 1 minute in this case, trades are getting registered. So at the start of the time period, which is 1 minute, the trade that was registered at a given price forms what we call as the open price. Sorry, the open price. The price point at which the asset class was traded at the end of the period is what we call as the close. And between the open and the close, there are numerous trades that are taking place. When you take the max of those trade price points, it forms what we call as the high, and the lowest point is called the low. So basically, you have four data points that you really need to form this candle: the open, high, low, and close. We call it the OHLC data. Now, what it does is basically helps you understand the price movement over that period in time. So, if we were to look at this little candle, let me zoom in. Okay, so if you look at this particular candle, you can see that it has a green solid body and two wicks coming out of it. Now, the green body, the lower end of the green body is what we call as it could be either the open or the close. Similarly, if the open is lower than the close, let me write it. If the open is lower than the close, the lower end or the boundaries you can see here is basically your open, and the higher end of the body is your close. Because open in this case is lower than your close, it is green in color. Similarly, in this case, which is this red bar, as you can see, this is the open point and this is the close. Since open is greater than close, in this case, it is red in color. And the high and the low are basically the endpoints of this wicks. Obviously, this is the high and this is the low. So whether or not you want to paint it in red or green depends on you, but it really means it's a bullish candle if your close is greater than your open, and it's a bearish candle if your open is greater than the close. That's it. That brings us to the end of our tutorial on candlestick. Hope you liked it. Bon trading. Au revoir.